Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, 3rd day of August, 2016, and this is the Daily Report for Gold and Silver. We do have the precious metals under moderate pressure today. Gold currently trading down between $6 and $8, whether you look at COMEX or spot. We're looking at December contract of COMEX gold, $1364.40, putting it down about $8 on the day. The low today has been $1360.60 and the high $1373.40. Let's take a look at silver. Silver also trading lower, off by about 0.9% today, almost a full percentage drawdown, down 18 cents at $20.40. The low has been 38 and the high 20.72. So as you can see, we're only a couple of cents off the low on the day. So traders, the first chart that I do want to look at today is our daily chart. This, of course, is continuous contract of COMEX. You can absolutely see we definitely had a down day, off about $8 on the day. We did raise our stops yesterday, and one of the reasons for raising them was the fact that as we approach the top of this, what we labeling as a third wave conclusion, put our line across, that came in basis the December contract right at around 1380. High today was only about 73. You can see that high's a little bit lower, 73 to 75, but we're certainly in the area. And this is, I believe, what we said yesterday, where if we're going to see a little bit of a pullback, and when I say a little bit of a pullback, I'm not looking for a key reversal, because I absolutely believe that this wave 3 is still firmly in play, and in essence needs to break above the top of this 3 here. And when I meant 3, I mean the green 3, the larger of the 3. But the way our count has been, this has been wave 1 of 3, 2 of 3, 3 of 3, 4 of 3, and we're now in the 5th of 3. And so we would absolutely need to break above this at some point. However, when we look at the subcount behind these smaller waves here, it's quite likely that what we'll see is something like a 1, a 2, and then a 3. And the key is if it does begin to correct, how deep will that correction be? And to do that, we really want to plot a very, very short-term Fibonacci retracement. Let's go ahead and put that in. And so traders, I've done just that. All I've done is added a very, very short-term Fib retracement that starts on these lows right here, the conclusion of what we're labeling as a subcount 4, up to the point at which we're at right now. So assuming that we get this market moving up, we get our small correction, 38%, that would take us to about 1349, and then I believe we would come in and go past breaking above these former tops, and these tops, of course, has been our yearly high up to date. Now, we currently have our stops, and I'm going to begin to talk about gold, our current trade, always in terms of continuous contract at this point. We've adjusted our entry price to $1338 to reflect that. Current price is $1364. Our stop is below $1350, and we absolutely want to make sure that our stop is below this particular area here, which is $1349, and then below that is a 50%, which typically isn't as important, although we have seen 50% come in play lately. But this is the area we want to protect ourselves, so that if in fact what we see is the market back off just a little bit to about a 38% retracement, it keeps us long, and then we can ride the second part of this rally, which I believe will occur should we see this market kind of dip at this point. And that's what I'm looking at, and that's also one of the primary reasons yesterday that we went ahead and we trailed our stops, because my sense was that as we approach this particular price point, the record high of the year right up in here, as we approach that, that's a logical place for the market to back off, for traders to come in and take profits. So it comes to here, assuming we get that 38% retracement, and then we'll go in and make our higher high. We're still, in terms of our strategy and our exit target, I still believe that we will eventually see that one-to-one relationship between wave 1 here and wave 3 here. To do that, if they're just equal, 5 and 1 being equal, which is standard, that would take you to about 1430. However, realize that unlike a wave 3, and wave 3, of course, has got to be the largest of the impulse, 5 does not. However, we're in a larger wave 3, which once again has got to be at least equal or greater than this particular wave right here, wave 1, and that's also where this particular number comes in. It's an extension of this wave 1 beginning right here. So for that reason, I still believe that the upside potential in gold is quite excellent. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.